welcome back to another episode of Sunday Funday, where we review our M1 Finance Roth IRA spreadsheet. In today's video, we're going to review our deposits, our purchases, and our dividends received. As you can see, it's the middle of May, and our account balance is almost $27,000. It has came down a little bit, but pretty sure everybody's accounts have gone down the last couple months. The good news is we have almost fully funded our Roth IRA, and we're not even halfway through the year yet. As far as our deposits, we've deposited $5,200 into our account. We recently were able to add $200, and we're slowly getting close to the $6,000 maximum deposit. We're hopefully by the end of June we'll be fully funded, and we'll just get to sit back and relax and collect the dividend checks after that. So far, during the month of April, we received $19.32 from SPHD, and then we also received $26.20 from QILD. So that's a total of $45.52 that was able to go back into the fund, and that actually purchased more shares of VTI. So currently VTI is down, and the way M1 Finance works is you set your allocations for each investment, whether it's a stock or an ETF, and then it buys shares of whichever one is low as far as your allocation. So currently it's mostly just been buying VTI, and as you can see here, in April we were able to add, that's the end of March. In April, we added $45.86 worth of VTI. And then with our $200 deposit, we were able to purchase, because we had received the SPHD dividend right here, we were able to purchase $219.32 worth of VTI. So the one thing that, I don't know if you guys have noticed just by looking at the screen, but the price of VTI has gone down, just like the whole stock market is going down. And this is actually a total United States stock market ETF is what is included in that. So all of the stocks that are in the U.S. stock market are in this ETF. So as that goes down, the price comes down. So we were buying at one point, when we started our Roth IRA, VTI only cost $139. And that was during the pandemic, the beginning of the pandemic. And then the price has gone all the way up. I believe it was way up over $200 at one point. Yeah, $242 maybe was the high. And then since then it's come down to $198. So as you can see, the price can fluctuate, but if you consistently put in to your investments, you'll be able to grab prices at different prices, and eventually they'll average out. If you noticed up here, we are currently down $369, but the good thing is hopefully we'll be able to put the extra $800 in, which will buy the shares at a lower price. It looks like my screen's broke, so it's hard for me to see. I gotta move it over. So it looks like VTI is back up to $200. So as you can see, we technically got a pretty good deal on it at that point. But if it continues to drop, we'll start getting better deals. And the neat thing is as you buy the shares of the ETF or the stock and the price goes down, you end up getting a better yield. So like as the price goes down, the yield goes up. So like on those shares, we were getting more than 1.46% yield for the dividend. So that also helps you to get more dividend income. And as you can see on QILD, as the price goes down, the dividend goes up. It's all the way up to 13.82%. And that one fluctuates a little bit, so the dividend could be off a little bit because it's a month by month is how they figure the dividend out. But anyways, we're still up $2,500, and the cool thing is this year, as of right now, our money will be putting $915 in theoretically. Like that's the yearly potential. So theoretically, this year, if that was the end of the year, we would have been able to put $6,900 into our Roth IRA. And that's something that I think a lot of people don't think about is you're only allowed to put $6,000 into one of there. But if your investments can generate income, and then you can reinvest that back into your investments, you theoretically could add more than $6,000 to the account. At least that's the way I look at it. That might not be the correct way of looking at it, but ideally it would be nice to be able to get that number up to like $6,000. Like if I would have started this when I was as soon as I could have instead of 3 years ago, that number would probably be pretty huge. So and my account balance would be way higher. I think I counted if I would have been able to start it from the beginning, I think I would have been able to deposit like, I want to say it's like around $48,000, $58,000 or something like that, somewhere around there. It was right around, it was under 60,000 would have been my contribution, and that number probably would have been huge by now. But it's one of those things, if you haven't started, you might want to think about getting started, because this will definitely make retirement a little bit more enjoyable if you get started early than if you wait till the last minute. Don't forget, this is Sunday Fun Day, where we review our Webull dividend portfolio, our M1 Finance Roth IRA, our Fidelity Health Savings Account, and our M1 Growth portfolio. As you can see here, our total value of our accounts altogether is $46,511, which has the potential of generating almost $2,000 in income every year. One thing we're striving for with our investments is to keep all of our money, as much money as we can, into tax advantage accounts. So all the white is tax-free growth. From about here up is our from about Leggett and Platt up is our health savings account. This is our Roth IRA, and then these are our traditional brokerage accounts. So our growth portfolio, and then our Webull dividend portfolio. Hope you enjoyed the video. If you enjoyed it, make sure you hit the like button. If you want to watch more investing videos, make sure you click one of the links on the screen or over in the sidebar. This is Sunday Fun Day, so if you want to stay up to date on our videos and see our progress over the years, make sure you hit the subscribe button. Thanks for watching.